Welcome back to the Medina podcast, ladies and gentlemen. And today I wanted to keep addressing the current state of the economy. Specifically, I wanted to advocate, gold and silver mining stocks. That's the topic for today, because we're coming into a cycle where, gold and silver are due for season. They're about to go on an upward trend of prosperity. And this is the time that I want to spread awareness for the average person, to stimulate your mind and maybe get you on a path of investing in this asset class, because it's going to prove to be very prosperous. And, it's going to be very abundant, with its profits for its investors. And the reason I say this is because, we have a Federal Reserve that's printing a lot of money, like I've said before, and they're going to continue to do this. They're not going to stop anytime soon. And, this is a hedge against inflation. This is security. People got to think of this as a form of security, while your dollar is devaluing, while other stocks are being propped up. If anyone doesn't know what that means, it's just specifically that, the stock market tends to have seasons, as they like to call them, where it goes into a bubble. It goes into a bubble, and all that means is, you have the Federal Reserve printing money out of thin air and giving them to corporations and taking their assets that are worth nothing, and these corporations use this money to grow their business or pay down their debt or just use it to float. So this in turn, they obviously report some of this stuff in their quarterly earnings, increasing their share price. And it's false, it's fake, because it's not backed by nothing. It's backed by the Federal Reserve just giving them free money. And that's why we're in a stock market bubble right now. Also, we have a lot of debt. That's the brand new problem that our generation has to deal with, is the fact that we're going into a brand new season of debt. Ladies and gentlemen. And, it's kind of scary. Hyperinflation will hit with all this printing, and gold and silver mining stocks have always been a good form of hedge against inflation. That's all it is. So all inflation is just, your money decaying over time. Your money today will buy you less than what it was, 5 to 10 years ago. So, with that being said, I wanted to advocate gold and silver mining stocks because, gold has been on a bull run for, since Nixon took us off the gold standard. So I wouldn't even really consider, gold being a cycle. Gold and silver mining stocks being on a cycle. More, I feel like they've just been on a huge growth scale. Because, you go and see the SPDR Trust, which is, a stock trending on the stock market. And it has been going steadily up since '08. In '08, I saw it was like somewhere around 100. It was peaking around 120, and prior to that, I think it was like on '04, '05, it was going for like $45 to $50, a share. And now it just recently started peaking around $190. And, the last $40 to $50 has been only recently within the last month or two. So, this is why I advocate to people, this is a stable train for investments. That you put in 10K, you're going to see your 10K grow nice and steadily. If anything, it's probably going to explode within the next 6 months to a year. And this is why the average investor needs to be preparing and being aware of what's going on. In the last bull run, you would have made 680% return on every $280 that you invested. I told people, hey, a troy ounce of gold was worth $400 before the '08 crisis. By the time the crisis was, finishing up, it was $1,400, and just recently it peaked at $2,000. Since Nixon took us off the gold standard, it was at $35 an ounce in the '70s, and now we're at $2,000. So that's an alarm. Like, hey, there's something that must be watched right now. Warren Buffett, who was an advocate of, hey, I will never invest into gold because it's an asset that produces nothing, recently just went and bought 20 million shares in Barrick Gold. That's another alarm. Like, hey, if this is the greatest investor that in our generation, then, we should be paying attention to the fact that all of a sudden he said, I'm going to start investing in gold and gold mining companies. He didn't invest into silver because Barrick Gold is specifically gold. But yeah, also what I wanted to touch on is that gold has been outperforming the SP 500 and the Dow, for a while now, and people have not been looking at that. It hasn't been on a downward trend or nothing. It has been merely sleeping. That's all it has been doing. And if gold has been outperforming the SP 500, then why are people saying, gold is a bad investment? Obviously, these people are not paying attention to the stats. Wall Street is very deceiving. You got to be careful about this kind of stuff because they'll advocate only what's hot, what's trending. They only care about propping up stocks, and sooner or later it becomes a bubble. And that's not great for the average investor, And this is why I say gold and silver mining stocks, specifically indexes. And what indexes are, ladies and gentlemen, are just, it's a fund that tracks a group of stocks. That's all it is. So it's a stock that tracks stocks. It's kind of complicated, but that's what it is. So you would have like 10 gold mining stocks, and then, the fund will project what those 10 stocks will do over a period of time. And, if anyone's wondering, hey, I hear you out, Chris, but what are some of these indexes that are out there? The GDX, which is the Van Vectors miners, and the GDXJ, which is the junior miner. And you also have another, the silver index, which is the global X silver miners. And what indexes do is that since they track like maybe 10 companies, they tend to go up faster than what the companies do. So if the companies all go up $1, the index will go up like $5 or $10, And this is why indexes are the best form of investment. And when you're looking at the stock market, of course, the Dow and the S&P. But right now, I wouldn't advocate those because, when gold and silver cycle comes up, their cycle is going to go down. And that's why I urge people to look at gold and silver mining stocks. Don't listen to what brokerage houses are telling you. Brokerage houses, as I said before, are very deceiving. They'll come through and tell you, hey, listen, we're promising you a 7 to 12% return, or, we want you to get into these hot stocks or get into this mutual fund or this index fund. We're going to give you great returns. But what they're not telling you is, hey, there's a stock market bubble. We are not inclined to be at your best interest. We only want profits for the house. We don't care if, the client loses their money or not. That's not up to us. We're protected by the law, such and such. You guys get the point. So this is why I urge people, be aware of what you're seeing on social media, where you're seeing when you go into these brokerage houses, hedge funds, etc. Because, I've seen situations where they'll advocate to people like, hey, look at what I did for this client. Look what I did for this client. But, with time, when this bubble pops and, you were, as they say in the poker table, you were the sucker at the poker table, your money can easily just go down. And I've seen this happen. Trust me. Go down from 50% to 60 or 70%. You can just get wiped out, and it'll take you a long time to recover. So just be aware of what these people are telling you. I care about the community, I care about the country, I want people to do well. And this is why I tell people, hey, listen, gold and silver mining stocks, ladies and gentlemen, you don't have to take my word for it. Just go and look at their trends. Go look at how they've been doing since the pandemic has started, and even pre-pandemic. I've been talking about gold since it was at $1,200 an ounce. And now it's at $2,000 an ounce. So obviously there's something that we must be seeing here, because prices don't just start going up out of nowhere. There has to be a reason, and the reason is the Federal Reserve. We have a currency that's backed by nothing, and we cannot go back to being a currency that's backed by gold and silver, because the whole reason we even got off the gold standard was because there was a scarcity in gold and silver. So, when this crisis hits, which it will, at least that's my prediction, it will hit. This is like one of those, self-perpetuating cycles where it's like you just can't stop it. The roller coaster is going to go down regardless if you want it or not, And gold and silver are your best ways against hyperinflation. So with that being said, I urge people, hey, go look at gold and silver mining stocks. If you are already in the market, I urge you to liquidate. This is just my recommendation, and look at gold and silver mining stocks. Or if you don't want to, then I recommend portfolio allocation that's majority to gold and silver. Because it's gonna do you well. It's gonna do your family well in the long run. If the dollar collapse, this is gonna soar. All of these prices are gonna soar, and everything else is gonna go down. So this is a cycle. When certain things go down, other things go up, and that's all a stock market cycle is. So I want to leave it at that for today, guys. I urge you, go look at these stocks. And if you're already in the market, allocate most of your earnings to gold and silver. They're going to do you well in the future. Of course, that comes with a tag of, hey, you must be disciplined. Don't take out your money. Don't be liquidating your assets. Just hold for the long run. It'll do you justice. Also, of course, with another tag being said, I look at things years down the line, because that's the best way the average investor will reap the best rewards. Obviously, specifically because of taxes. You're in a 25% tax rate, or you're moving towards a 30% tax rate. You don't want your capital gains to be taxed at 25 to 30%. You want them to be taxed at preferred investors tax rate, which is 15%. Yes, I said a 15%. You got a preferred tax rate on your capital gains at 15% if you hold for more than a year. So that's why you should be preparing now, so when in due season and it's time to harvest, and you want to liquidate some of these assets, for whatever reason, maybe you want to use it as purchasing power, or just you want to get out, you're able to get taxed at 15%. And this is why I'm telling people prior to this, they already have been on a bull run for a while now, but this is still child's play to where it's going. So, be aware. I urge people, like I always say, to think for themselves, and those that are agreeing with me, I urge you to take action and be disciplined, of course. And we'll leave it at that for today, guys. If anyone wants me to talk about anything business related, let me know. If you want to see my podcast on Anchor or Spotify, the link is below. And until next time, thank you.